Hello everyone, this is Paul from the APN Academy, and in this video we're going to be talking about supply and demand. Now, if you do understand and master supply and demand, you're going to be able to understand exactly why price fluctuates up and down, why prices go up, sometimes prices are high, sometimes prices are low, even in your daily life, right? Like for example, some in the recent times people are talking about inflation, prices are going up all over the world. Is it the war between different countries that are having the wars, or is it ABCD, right? But in simple terms, it's this aspect of supply and demand, just basic economic words that are going to help us. Now, since we are traders, we also use supply and demand since it's what affects price. Now, if you master and understand it, it will be very, very easy for you. Even when you go to purchase something in your normal life, you'll be able to understand why has price gone up? Why is it dropping, right? So, we're going to be looking at these aspects below here. We're going to first be defining what supply and demand is. Then also we're going to be looking at the psychology of supply and demand. We need to understand exactly how does it affect us, how does it affect price, and how can we actually use it in trading. Then also, thirdly, we're going to be talking about how can we identify and draw these areas. You can call them areas or zones. Then we shall be looking at how to trade them. You know how we do it on this channel. If it's your first time, we usually first start with theory, make you understand in detail. Then we get into back testing with an example. So without wasting time, let's just get into it. Give us a thumbs up. If you've not subscribed, make sure you hit that subscribe button and turn on the notification bell, right? So let's first start with the definitions. Supply is when there's an amount or quantity of securities. Since we're dealing with trading, we're calling them securities. It can be a forex, it can be pairs, it can be stocks, it can be anything, right? That is available to be offered. Of course, offered for sale, right? Now, if there's someone willing to offer stocks, like to sell off his or her stocks, if the right amount comes in, that person is going to let that stock go, right? Now, the same applies for those who are trading a forex. If someone, let's say, has an amount X of euros or pounds or the dollars, and you come with the price that he or she stated, that person is going to let it go. Now, in the market, we do have people sometimes you call big boys, market makers, hedge funds. They usually create those amounts, right? And how will you tell that the amount or those levels have been created? It's when you start seeing very, very huge movements in the market. Now, these huge movements, we have been speaking about them in terms of what we call momentum. We have been speaking about a lot of momentum. There are two aspects in trading that you need to really understand well: turning points and momentum, right? I mentioned them in almost every video that we have uploaded on our channel. Momentum, observer momentum approaches here. Momentum is very, very important. It communicates a lot, but we traders tend to ignore it. So how do we tell that this area here has supply, right? Of course, supply we're looking to sell. So on the charts, it's supposed to be going down. Price is supposed to be going down because maybe a certain threshold has been reached and people are letting go of these securities. That's why we define it as quantity of amount of securities available to be offered to sell. So we are saying, how do you tell that the movement, this movement here has supply at a certain level, right? We tell by the momentum how the candles are pushing. And how do we tell that there's a strong momentum? When there are big candles. I'll just show you an example here, right? This is how it looks like. For example, when you look at this, the market started selling from here. Ignore this first, right? The market started selling. Look at the candle. Small candle, increased in size, and got bigger, and then lost value, and then it had to come back here. This means that at this price, this is the price at which the market makers are willing again to sell this security. It can be a forex pair, it can be anything. Are you getting it? It's the price at which they're willing again to sell, or it's the price at which they're willing to take more trades. These guys do not just trade at any price, right? So that's why I'm saying that if you can really understand and master supply and demand, you really be able to really make good money from the markets. But I'm going to state this again. Most of the things in trading do not work independently. So even if you want to use supply and demand, you need to apply what we call confluences. By confluences, you need to put more than two aspects in one place or together so that you can get more accuracy, right? So that's the definition of supply, right? I will give you an example. For example, when iPhone 14 came out, there's a price that was attached to it. So whoever went with money, the Apple stores were willing to sell, right? That's because you're meeting the price. That's the price they have set. It's the same thing. So we shall give an example that this is the price X, or let's say $1,400 of that was attached to that iPhone 14, right? So whoever came with $1,400 here at this price was being sold to the iPhone. Are you getting it? So that's what we mean by supply, right? So let's continue and we look at the definition of demand. What is demand? Demand is quantity or amount of securities that can be bought. Meaning, if you want to buy something, you need to be able to have what you're going to give to the person who has what you want. Let's continue to use the example of iPhone. Let's say Apple stores have the iPhone 14 that you want. You need to have the price they've attached to it. Are you getting it? The price they've attached to it, let's say it's 1,400. You need to give them that amount of money. Are you getting it? Now, this is how actually demand appears, right? So if they've set a certain price and you have it, right? Or let's say they've set a certain price, let's say at 1,400, but very many people come into the market to want the iPhones, and let's say the prices first go up. We're going to talk about this in the psychology of demand and supply. The prices will first increase, then you will again want to buy, because you have 1,400, you're again willing to buy this Apple iPhone 14 at 1,400. So you'll wait for it to come back at 1,400 and you can buy, right? This is how those big banks, those hedge funds, and the liquidity providers in the market do trade. They set a certain price and they will only trade when price comes back to that. Of course, they keep setting their own prices as the market is moving, either it's moving upwards or downwards. They keep setting the prices at which they are going to take more orders, right? Because they know us retailers, we do have little money. We cannot stay in the market for very long. So if you attempt to stay in the market for very long, that's when you become liquidity. You keep adding money into the market for them to close their profits, right? They do take their profits through the people who are losing their orders, right? So if you do not understand these movements, that's when you become liquidity to them. Are we together? So that's what we mean by demand. I hope you guys now understand the meaning of demand and supply. But on the charts, how do you identify demand? Like I stated in supply, we're looking at selling. Now here we're looking at buying when it comes to demand. Demand, we're looking at buying. But we're looking at where was that point where the market issued out big candles. For example, here, you can clearly see the market issued out big candles here. So we're going to spot out the candle that was prior it. So this is the area at which the people, these guys, the market makers, the liquidity providers have set their orders. Why are we saying it is this area? Because they are the only people who can give out big pressure in the market. For example, here, they issued out these big candles here. Of course, some people are going to tell you that you should look out for, let's say, 3 candles or more. But momentum can also be 1 candle or 2 candles, as long as the candles are very, very big, right? For example, here we had just 2 candles. These are big candles. So meaning that this area here down here has what we call a demand area or a demand zone. So you can clearly see the market came back exactly this price, filled in these orders that were here that set at this price, and then started pushing up. The same applies here. The very big momentum here, these big candles, the market came back and filled this price here because I'd set it here. So these guys keep setting up these orders, the demand zones and supply zones. In this case, it's demand because we're going up. They keep setting up these zones as they're going up, right? For example, so here we have this area here. So the higher chances they're going to come back to, if they want to add trades, they're going to come back to this price here and then they push up. They do not add orders in between. Just once again, how do you spot out demand and supply areas on the charts? No matter what you're trading, look for where there are very huge candles. That's where their orders are. Below where that move started, that's where their orders are, right? So that's how we define demand and supply, right? Now, having looked at the definitions, I would like us to look at the psychology or understand the psychology of demand and supply, right? Now, one, the more there are stuffs to be supplied. For example, the more there are iPhones to be supplied, the price is going to decrease, right? For example, let's assume Apple released the iPhone 14 at 1,400 and people do not buy. Remember, we know that Apple releases iPhones every September to October of every year. in between these months, right? Let's say from this is 2022 until 2023, they have not sold out all the stock they have in their stores. What will they have? What will they do? This price will have to drop because they have to release new iPhones for the following year, for 2023. They have to release maybe iPhone 15, maybe. I don't know what will come out, but I'm just trying to give you an example. I hope it makes sense to you. So these prices will drop so that they can be able to manufacture the new product. Are you getting it? So that's why we're saying that the more there is available to be supplied, the more the price drops, because there are very many products, or it can be in terms of numbers of suppliers. There are very many suppliers. So the buyers have choices to make. And once there are choices to make, what will happen? The suppliers will decide to chop on their prices or to cut their prices so that they can sell off their products, right? And also the opposite is true. The moment there is less to be supplied, let's say Apple decides, I'll give you an example of let's say Lamborghinis. The Lamborghinis and let's say also Rolls-Royce, those cars are made very few every year, right? So why are they made very few? Because there are specific people who can afford them, or there are very few people who can afford them, right? That's why they make them very few, and they are very, very costly, right? I hope that makes sense, right? So now this is how it will be represented on the chart, right? Now, if this is a certain price here, and there are very many sellers at this area here, let's say there are like 20 people who are selling. Let's say you've gone to the market, let's say you want to buy a shirt, and there are 20 shops, or there are 20 people selling the same shirt. What is going to happen? They are going to start reducing their price, right? But at the best price at which they will make the most profit is when the price is at this X. Let's say it's you're buying the shirt, let's say at $20, right? So when price comes back here, that's the best price at which they can make more profit. So when price comes back here, this when they will attempt to supply most of those shirts, right? But the moment it comes back here, remember we have 20 suppliers of the shirts. So the price again will be dropping because there are very many suppliers, and yet the buyers are not very many, right? So this is what makes it happen like that. Like when there are very many people supplying it, the prices will drop. When there are very few people supplying it, the price is high, right? So this is what we mean by more available to be supplied. Supplied means drop in the price, and less available to be supplied means increase in price. I hope you guys now understand that. I'm trying to bring in normal live examples, and also we put it on the charts, right? Now let's look at how we understanding the psychology of demand is just the opposite. When there is more demand, it means there's going to be increase in price. I'll give you an example. Let's say the Rolls-Royce company made only 20 cars, and that year there are 50 people who want to buy. There are 50 buyers who want to buy the Rolls-Royce cars. What will happen? Rolls-Royce will need to increase the price of these cars so that there are few out of these 50, there are few people who can afford them. If they're selling them, let's say at $350,000, right? They could be forced to push the price to $500K, right? So this is what I mean by this statement, that when there's more demand, it means that there's going to be an increase in price, and vice versa is true. When there's a drop in demand, the price will decrease. For example, Rolls-Royce manufactures 20 cars in 2020, 20 cars, and only 5 people turn up. But their plan, or their release plan was to offload these 20 cars. What will happen? If the car was at $350K, it will drop, let's say, to $180K or $200K, so that the people can be able to take them away off the market, because they already have what is lined up for the following year. I hope this makes more sense to you guys. I hope you guys now understand what we mean by supply and demand, right? So when you come to the charts, I've already explained how this comes about. Let's say this is a certain price that is set, right? Now, if there is more people demanding something, the price will start increasing. Remember, we consumers, we want cheaper prices, want low prices. So when suppliers realize that, oh, there are very many people actually coming in for this product, the price will start increasing, right? If, let's say, I've just given the example of the Rolls-Royce. If they make 20 cars and 50 people want to buy the cars, they have to increase the price So at this 20 can accommodate those who can afford. This is why you see that the price goes up. That's why you see the demand level is downwards here. You can just see that this is the price that the market makers set, that we shall take our orders from our first order. So you can see when they put in their orders to the market, they have big candles. These are the big candles we're talking about, the momentum candles. So they will only take trades when again they come back into this area, and then they can create another move. So whenever they come back into this area, you can see the momentum here, right? Big candles being issued at, meaning again, this candle prior to this move here is giving you the the demand level again. You can clearly see again, they came back into it, right? Now, again, where was the momentum? The momentum that when they came into this order here, they created a demand zone here. You can clearly see here, after they issued these big candles, it means that they have to come back and fill in their orders from this point here. Then they can push the market, right? So this is how I would like you guys to understand demand and supply. This is what causes prices of anything, whether it's fuel, whether it's gas, whether it is whatever you're using out there, whether it's the products or the consumer goods that you guys are purchasing. This affects the prices. Also in the market, it does affect, right? It does affect the prices of how things move, right? Now, I think we have now clearly understood what we mean by demand and supply. How do we identify and how do we draw supply and demand zones when you're trading? I've been explaining it in a dynamic way whereby I'm mixing real life and market life. Now, I would like us to look out for how do we do it on the chart. One, you're going to look out for aggressive move, what we mean by impulsive move. I've already showed you guys that supply means that you're at resistance level, you're on top, you're looking to take sales. You want to look at where aggressive moves in the market, those big candles. You are only looking for big candles. We're not interested in small candles. That is one. Then two, you can also look out for patterns. Sometimes before the markets start moving aggressively, they will create maybe channels, consolidating channels, and then they start breaking out aggressively. It means that this area here has what we call a supply zone if it is up. And if it is down, when the market came down and started consolidating, creating a channel or creating a falling wedge, and then it starts issuing out big candles. Before this momentum, this candle prior here is what we are interested in. The sell candle that is prior here, right? It's what we're interested in. This area becomes your demand zone because it's because of the orders that we have here, the demand of these hedge funds, the liquidity providers, that caused this high pressure to be pushed up. So it means that when they want added more orders, they will have to bring the price back here, create another demand level, and then they can make a new high. Are we together? The same applies for supply. I've already explained for supply. It's just the opposite. Supply is up and demand is down. I've already explained how what they mean. We have defined what they mean. We have looked at them in detail so that you can understand. I've given you examples in real life, right? So that's how you identify them on the chart. Let's again bring back the images that we had. Let's look at supply, right? Look at this, small candles coming up, but then when it reached here, we started seeing candles increasing, smaller, bigger, got even bigger, right? It means that in this area here, we have a supply area that we need price to come back, right? Then we can drop back. And you can see what happened. We brought back aggressively to trap buyers. Now buyers were buying, not understanding at this point, we had an aggressive push down before it lost momentum to come back up. It means that this area has the supply, so we started selling off. Now let's look at what is on our right-hand side here. Before here, we created a structure. That's why we're saying that look out for patterns. You can look out for patterns, channels. You can look out for shapes, right? Where the market consolidated before pushing up. Now also here, you can clearly see we had a consolidation here, creating this W here. Then what happened? The market started issuing out big movements, big candle movements. So this area here, the candle before this big movement started, in most cases, it's going to be the opposite of the movement, right? So in this case, it will be a red candle. This is where the demand level is. And you can clearly see the market came back into this demand area and then pushed up again. But when the market comes back again, in most times, it's going to again create a new demand level. Now, you can clearly see the candles that were formed. When it came here, it created another demand level by creating these aggressive moves. Only one candle taking out all these candles. It means this is a very strong momentum, right? So the candle before this move is this one here. You can clearly see what happened. It created a demand zone and came back here. Are we together? So again, when we're pushing up here, what happened? They pushed to big candles. This, you can clearly see this candle here, and you can also see this candle. But before, what candle was there? An opposite candle that created for us demand area. And you can clearly see what happened. The market came, picked these orders, and then pushed up. Now here, people who do not understand this will be being triggered out, and then they create liquidity, what we call liquidity, for the market to continue pushing up. Like I mentioned earlier, the liquidity providers are making money off the losses of people that they're living in the market. Are we together? So this is how we do identify and draw support levels, but we're going to do it on the chart, right? We're going to do it exactly on the chart, so that you see us doing it in real time, right? So now let's look at how do we actually trade the supply and demand. One, you have to first identify the areas. I've showed you in the previous slide how you identify. Then you can add in your conferences like support and resistance, Fibonacci retracement. Some of you even use MACDs. Some of you use the moving averages. Some of you use very many other tools for Bollinger Bands. But of course, us as pure price action traders would like to, maybe you can bring in the Fib tool and also the support and resistance. That's why I mentioned them here. So first, identify the support and, sorry, no support. You identify the supply and demand zones. And then after that, bring in the confluence. We're going to do this on the chart, right? So without wasting time, let's just go and do it, because I've showed you theoretically, but now I would like us to do it practically together so that you can also go and apply it and back test. Okay, so this is US 100. So I would like us to take an example of identifying our demand level, right? Or our demand zone or our demand area. Now, we do have on the current market here, we do have a market. You can clearly see the sellers were struggling. And what happened? Big candles of buyers started coming in. What does it mean? It means that there is money that has been pumped into the market. So what was the previous candle before this move started? It was this sell candle here, right? So we are going to mark this sell candle. And the market makers, if they're to add positions, because this one they first put in positions. Remember, if they're trading, let's say with $30 million, right? Or 30 billion. They're not going to put all this money at once. Why? Because I've told you that they make money when people lose. So they're not going to put it at once. Few people will lose money and they will not be able to make the profit. It means they will have to hold longer than their plan. So if they don't put 30 million, they can do it in phases. They can first come and put in, let's say, 20 million, right? And this first go, they can put in 20 million. Then when they come back again, they put in the 10 million. Then they will have a total of $30 million here. Then they can push the market up. Now, by the time that happens, it means that they've already made the profit they're supposed to make to close, right, of these positions. So we have already marked the demand and support, the supply and we have marked our demand area here. It's not supply, sorry, right, sorry. So remember, how did we mark it again? We looked at these big momentum candles here, right? So after looking at the big momentum candles, what are we interested in? We are interested in looking at where did the move start, the previous candle where the move started, which is this sell candle. So I'm just going to mark it like this, right? So we're just going to be interested in the price coming back into this area here. Then we can be able to take a trade, right? I'm doing this example on NASDAQ, US, or you can call it US 100. So we're not interested in the trade until it comes back into this demand zone here, because it's where the money is, right? So let's see if it comes back. So it took some time. Then this is the first time it came here. Now, when price comes back into the demand zone, please do not just take a trade because it's in this area. It can also break through it. Are we together? This price can break through it and continue, right? Now, you do not want to be caught off guard like that, because they could also be wanting to trap you, and then they change the price, right? They may pump some money, take out their profits, and then drive the price against you, right? So what do you want to do? You want to use some confirmations, but before confirmations, you want to see a shift of trend. Now, in such cases where the market is so stiff approaching this area here, what are you going to do? You would like maybe to refine your trade. Let's say you're in H4, you would like to go maybe to a smaller time frame, or if you're good with candlestick patterns, you would like to see a candlestick pattern forming here that you can be able to use, right? So if you're good at candlestick patterns, for example, personally, I'm not a big fan of candlestick patterns. I normally like using momentum. But if you're a big fan of candlesticks, you want to see a candlestick pattern being formed, then you can take your trade. For example, here, we want to see what will happen next, right? Now, this is an inside bar. This is a proper inside bar. If you want, you can take your trade from here, right? You can take your trade from here, and then your stop loss just down here. Or if you're not okay with that, of course, we want a 1 to 3 or raise 1 to 3. right? If you're not okay with this, what are you going to, let's just put the stop loss here, and we want a 1 to 3. So this is the current price of NASDAQ. Those who are trading it, we are doing a current on the current price of NASDAQ, US 100 or US Tech, right? Or what can you do? Alternatively, you can go to the next lower time frame, which is, let's say, H1, which is commonly used. Of course, there are lower time frames there. Then you can be able to say that I won't take my trade immediately if the price breaks above this area. And then you can refine further by going to minute 30 or minute 15 so that you get a better entry. So in this case, someone would actually take this trade around this point here, right? You'd have a better entry here, but I see almost at the same place. So I can just go back to H1 where we a bit refined from. And this is our entry here. So I'm just going to shift it here, like. So our stop loss is just below this structure, just below that structure there. So we have our nice 1 to 3, 1 to 3, 2, 4. So let's see how actually this price plays out until the market, how it played it until the market closed, right? So we first had a drawdown, then let's see, this is actually where the price closed and you're running in profit. This is where the market closed. I've used an example of the current price to get for us the demand zone or the demand area. Now I'd like us to take an example of the supply. Okay, so when we look at GBPJPY also, we do have an aggressive drop here. We have this strong momentum, small candle got slightly bigger and then even bigger, right? So when you see such moves, you just know that there is money that has been pumped into the market and you want to tap into that opportunity, right? So now in this case, we're looking at supply. So meaning we're going to have our area above here. So this is where the move started. And then we're going to use the candle prior. So the candle prior is this one here. So we're also going to mark it. Now, what do we want? We want the price to come back into this area, and then we can look out for our trade. Now, if you want, now you can bring in your confluences or fib levels. You can bring in your indicators. Though here I'm just doing a pure price action to make the video short. But of course, in the future videos, we shall show you how to combine all this, right? So today we're just focusing on how to understand supply and demand in detail. Then all those other things, we shall be bringing them in when you actually understand how these things come in and how it actually works, right? So having marked your area, the next step, remember, is just to make to allow the price to come back here. If it doesn't come back, it is fine, right? So if you can clearly see the momentum was really big, just 3 candles covering all these previous candles. How many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, actually 14 candles being covered by 3 candles. This is meaning there's money here. So we want to tap into this money. We want price to come back here, right? Now, remember, the moment price comes back here, you don't take immediately. I've already shown you that in the previous example of demand. You have to either do refining, you have to wait for candlestick patterns to form, and also you have to wait for change of trend, right? Which I usually like basing on the momentum of how price approaches there. Then I can wait for it to shift away. Now let's play and we see actually how it did play out. So it took long to come back to that area. So this is when price came back here, right? You can clearly see now that people will want just to take trades immediately. Those who want sniper entries, those who want to have a small stop loss and a big take profit. You can clearly see what happened. Right? The market triggered out all these stop losses because they are aware there are people who understand exactly these concepts, so they will also want to manipulate them. Now, when the first trade candle issues out like this, you want to go to the entry time frame. Since it's daily, we shall use H1. Then what we want to see, now you can use in your other confluences to take this trade. If you want, if you're a big fan of trend lines, you can also bring in your trend lines. You can use all those concepts that you do want, right? Now, so in this case, what am I going to use? Let me just observe. There's a lot of noise in H1, so I'm going to filter out the noise in H4. So when I come to H4, I just want to reduce the noise. There's too much noise in H1. So here, the market is so stiff, I cannot bring in a trend line, right? It's so stiff, I cannot bring in a trend line. Now you can clearly see, but here in H4 is showing us that we do have an M that actually has been retested with a big rejection. So double top with a big rejection at the neckline. So what are we going to do? We're just going to take our trade from this current price, and then our stop loss is going to be slightly above this area here. And then we want a 1 to 3 as usual. 1 to 3. Let me put it at 1 to 3 just for the purposes of not holding so long. And of course, our rule of holding. So let's see how this trade plays out. And you can clearly see it hit your take profit, right? So this is how you identify the supply and demand zones. If you really master this, I've explained it to you in detail when we're starting, how it can help you when you're purchasing groceries, how you're purchasing anything that you use in your daily life. And also you can use the same concept in the markets. I hope you guys really got value out of this, and you can start a back testing and use it. We shall make a detailed video about you can put in other confluences like the moving averages in case you use them, or you can put in the Fibonacci retracement tools, how you can perfectly align them with other tools that can make you have more confluences for more accuracy, right? So that was it for this video. If you really got a value out of it, give us that thumbs like, and then also if it was your first time coming across any of our videos, particularly this one, make sure you subscribe. We do release such videos almost every week, so subscribe, turn on the notification bell so that you don't miss the upcoming videos. Have a great day.